as an entrepreneur, you trying to get access to money is a bit like hell. And
It's
so
terrible.
you would be better off to go to McDonald's and work for 3 months. And then as soon as that property closes, you can just quit your job. I mean,
Right.
it's that dumb. Hello, and welcome back to the podcast. Thank you very much for being here. If you are a first timer, welcome. If you're coming back, you've met Tarisa. If you have not met Tarisa, go meet her. She's a couple podcasts back. Today, we are going to talk about having equity in the wrong spot. So I am going to let Tarisa start this one.
Yay, the pressure is on. Hopefully I don't disappoint you guys. I've got some big shoes to live up to over here. No, I really like this idea. It's really common in the real estate industry to say you can't eat equity. And basically it's just like, everyone's so excited to pay their house off fully and things like that. And I like to think critically about all the different scenarios. It's like, okay, how does this actually pan out? So you can't eat equity means like your equity doesn't put food on your table, right? It doesn't translate to cash in your bank account unless you do a cash out refi or unless you have a HELOC. Or the idea is you have to ask for permission in order to get access to that equity. So is it actually yours? Not really, not until the bank gives it to you. And this happened to someone that is very close to me. He wanted to have a 15-year mortgage so that he could transfer the property to his kids after it was done being paid off. And that's kind of like a good parent thing to do, right? Or that's what a lot of parents want to do, is pass property on to their kids or to their kids so that they have some real estate and some assets and they're not starting from scratch. Very admirable, the intention. However, what happened was, everyone knows if you do a 15-year mortgage versus a 30, the payment is higher. The interest rate is lower, but the payment is higher. If you're thinking like a bank, why is that? They're getting all their cash back in
And they want
half the time.
flow, right?
Absolutely.
Nelson said, we just talked about in the last podcast that we did, we just talked about that they want cash flow. Why do they want cash flow? Because they can turn money 10 to 1. So they want cash flow. They don't want your property.
100%. They want the cash flow. And it's like Nelson says, banks don't lend you money because you have real estate. They lend you money because you can make payments. It's really that simple. It's not complicated at all. It's like if someone stops paying, then what happens? So this is what happened, is that this person lost their job and then they couldn't make that high mortgage payment. So imagine trying to get access to your equity when you don't have any qualifying income in order to tap into that. So it puts you in a vulnerable situation of being like, hey, I have so much money locked up in this property, but now I can't qualify for it because I gave the control over to the bank. I was so adamant about paying the bank off. And it's like, the bank does not care about you. They do not. They care that you can make the payments, right? If you're making payments, they're your best friend. Yep. Hey, it's an increase on this credit limit and an increase on this credit limit. And it's like, as soon as you start missing anything, they're the first to take that opportunity away. So as a result, this person had to sell their property because they were in a situation where they didn't put their equity in the right place, because they did not know about infinite banking. They did not know about properly structured whole life insurance. So Mary Jo, what are your thoughts on this whole equity conversation? Because I just love your insight on things.
Yeah, I think it's a huge one. So we just talked about getting rid of the bank in our last podcast that we did together, and how we shouldn't be using the bank because it's called becoming your own banker. But in these situations, we're not talking about leveraging, right? We're just talking about, we want to be good stewards of our money and do what Dave the Dipstick says and pay it off in 15 years, right? Get your house paid off so that it's all paid for and it's all good. Great advice, Dave. Except if I lose my job. And this happened also to my daughter's boyfriend. Right before COVID happened, he refinanced his house to a 15-year mortgage because interest rates were low. He wanted to get it paid off. All was great in the world. COVID happened. He lost his job. Then all of a sudden, it was a real struggle to make that 15-year payment. And I'm like, why? First of all, on God's green earth, like I'm just sitting here doing nothing all day. Like, why would you not ask? So
Yeah.
this is the problem if you don't ask. So now you went and did that because you're listening to somebody else tell you that debt is bad. And we don't want you to have debt necessarily. But what people aren't understanding is that what if we still paid our house off in 15 years, but we paid a 30-year mortgage to the company and the difference we put into a whole life insurance policy?
Bingo.
At 15 years, we have the cash value to pay the house off. Yes, we have to pay ourselves back, but we've gotten access to that money in 15 years. Because what happens if we lose our job? And it doesn't matter if, I say this all the time, you can be debt free. The bum on the street is debt free, begging for cash flow. He can't buy food, cigarettes, booze, whatever it is he's going to do. He cannot do it without cash flow, but he doesn't have any debt. Kudos to him. I've talked to Dave Ramsey coaches, people that have actually taught Dave Ramsey classes. And you guys, I'm not here to bash Dave Ramsey. So as you're listening to this, get off my case. There is about 95% of everything Dave says I can agree with. Some of it, not so much. But if we want to do a 15-year mortgage because of interest, we need to look at these people that have taught the Dave courses and then come to me and said, Mary Jo, I am broke again because this is the second time I've had to drain my 401k so that I can live and I'm debt free. But now I don't have any cash flow coming in because of whatever's happening in the world shut down my income. And so many people listening don't believe it's going to happen to them. They're like, oh, it'll be okay. I'm never going to need that. You guys are a bunch of doorknobs.
Yeah. It's like everything's perfect until it isn't. You know, it just means you haven't hit a dip in life yet. Which is good for you, right? Like, congratulations. I am very happy for you. I hope that the path of life continues like that for you. And for other people that have experienced life in a dip or things that didn't work out the way that they were supposed to, it's so good to have a backup plan where you don't have to ask someone for permission, right? Like this guy couldn't transfer the property onto his kids because he lost his job and couldn't make the payment. But like you said, brilliant strategy. If you take that difference, still have the 30-year mortgage, put that difference inside of a policy because what does it give you? Opportunity. It gives you options. You're not as desperate because you have put the keys and access to cash and control in your back pocket instead of having to ask someone for permission. And like I said,
what does a 30-year mortgage give you? Control. Yep. It gives you opportunities. It gives you flexibility. You can still pay it off early. I always tell people, I don't care if you buy into the infinite banking concept or not. Does not matter to me. Don't care. If you don't do that, at least still do a 30-year mortgage, put some money in a savings account, use it, and then use that money to pay it off in 15 years. I mean, you're not going to get paid anything on that savings account, but it doesn't matter. You don't have death benefit tied to it. I don't care. You're paying extra, even if you've got a 30-year mortgage and you're paying extra on it every month. This is something that I see a lot, and you probably see it with your clients too, that they give the bank this extra money and then they don't have any extra money. They don't have any money in savings. So then they go use a 20% interest credit card, or they have a HELOC that's a higher rate. And it's not as nice as a 30-year mortgage. Like, why in today's world, let's just use what's happening today. People, and I see this, people have 3 and 4% loans, and they are putting extra money on a 3 and 4% loan. And if you need that money, you have to go back to the bank and borrow it at 7.
Yeah. Yes. It's so silly.
They don't think about it because we're not taught to think that way. It's not their fault. They're just not taught to think that way.
Well, I think it's like we're so kind of pigeonholed into like what we're doing financially. It's like, I'm going to pay this down early and then I'm going to save in my 401k over here. And then I'm going to save in my 529 plan over here. But then I don't have any savings. So I have to use my credit card. It's like if you zoom out and actually look at the big picture of your money flow, a lot of what we do on a day-to-day basis that we're taught to do does not make sense.
Mm-hmm.
Like you basically just said that. It's like if you don't have liquidity, you have to go then turn around to the person that you're paying extra every month and ask them for that money back. And they're going to make sure that they charge you for it.
Yep. And it's not just the interest rate. You're going to have to file the paperwork. You're going to have to give a pint of blood, maybe your firstborn child, to get all of this in our world. And entrepreneurs are most likely the ones listening to this. I remember when I took my last loan, I have a little bit of loan PTSD from that because I was so mad that I had a really big month of commissions. We closed on our property in December, and I had to give them 11 months of bank statements because they couldn't understand why I had more money in January coming in than I did any other month that year. It had to be justified. And so, as an entrepreneur, you trying to get access to money is a bit like hell. And
It's
so
terrible.
you would be better off to go to McDonald's and work for 3 months. And then as soon as that property closes, you can just quit your job. I mean,
Right.
it's that dumb. And so if you have a good relationship with your banker, absolutely fantastic. There are good bankers out there that understand business, and that is not the vast majority of them. And so why are you paying down that debt? Why aren't you redirecting that into a tool like life insurance that can have uninterrupted compound interest and dividends? And you have the death benefit attached for your family if something should happen. So we have to it's our personal residence in most of these cases that we're trying to pay down very quickly. And that's great and that's fantastic. But don't, as you said, don't pigeonhole yourself into that mortgage, because if you need to refi it to a 30, it's probably not going to happen.
I mean, Nelson talks about this a lot and you talk about it a lot, is like, what's the opportunity cost? Let's say even this person didn't lose their job, but they had that money inside of their life insurance policy. Could they have used that to start a business? Could they have used that to, I don't know, purchase more property that's cash flowing? Yes. But the idea is they have options. If you have cash, you have options. And that is such a beautiful thing. It's like cash is essentially like blood, right? Like we need blood to be alive. Cash is the blood life of how you operate your household, how you operate your business, how you operate real estate investing. Like whatever you're doing, that is necessary in order for survival, right?
Mhm. Nelson
You
says
have
it's
to have
water,
it.
right?
Yep.
Money is like water. It must flow. So let's talk about this person. Did they try to refinance and were unable to refinance to a 30 to lower that mortgage for them to be able to afford?
Well, they had lost their job. So they didn't have any income to qualify for them
So
to
no refinance option.
no refinance option. And it's like their childhood home. So that is not only like emotionally damaging, but it's also like this person wasn't able to accomplish their goal, which was to pass that property on to their kids. And it wasn't because the intention wasn't there. It was because they didn't have the right tools or the right education in order to make sure that they were in the driver's seat of that they were in control. And something that's really interesting that I want to bring up is I think it's so key to think like a banker. It's like if you have two people side by side, one house is 90% paid off and the other house is 50% paid off. Both people lose their jobs. Which house is the bank selling first? The one that they can get the most cash
Right.
out of,
Yeah,
right?
the
The
one
one that's
that's
90%,
90% paid off.
100%.
Yep.
Yeah,
That house that's 90% paid off, they'll sell it at a garage sale.
exactly. It's because they want the cash flow. They don't want the house, right? They want someone else that can afford to make payments. So I like to think of it as the quicker you pay down your mortgage, it's like if the bank owns most of the debt, they're actually the ones at the most risk at this point in time, right? At the beginning years of the amortization schedule, which is why they charge all that interest up front because they're CYA. They're
Mhm.
making sure they're mitigating their risk. And the faster you pay down that debt, the more you're actually at risk because now you have to ask for permission in order to get access to that or sell it.
Yep.
So,
And it is not. Now, let's also talk about the fact that there is human nature involved. And people like to feel warm and cozy over not having a mortgage. And I have 3 rental properties that are 100% paid for. I don't owe money on any of them, and I feel warm and cozy over that. Okay. So I get it. I 100% understand the people out there saying, you guys are idiots. I don't want a bank loan because you said that they have control. Yes, 100%. It's what you do with that extra money in those 15 years. And so as much as there is still property I have that I still owe money on, as much as I want to pay that off, I also am in a situation, if I want to buy more property, I now have to go back to the bank and use the equity and the ground that I have paid off to do that, which means that comes at whatever interest rate is at, and I may not even have a down payment for the new property. I might, if I really want to leverage, which we've talked about already, that's not the best thing. But if I really wanted to be crazy and leverage, now all of a sudden I have to borrow equity for the down payment. But if I would have just put my money away for 15 years into a savings account, into life insurance, into a CD, again, I don't care what you do. Obviously, we suggest the life insurance piece. Now I have 15 years of money that I could use as a down payment if I wanted to. I might have 5 years worth of extra payments that I could use as a down payment. If I wanted to remodel my kitchen, I don't have to go back for a HELOC, right?
right.
I have money in cash value to use to remodel my kitchen. If I have to buy Johnny a car, I have cash value to buy him a car, to pay that back, to have that money again in 15 years to pay down the mortgage.
Yes, it just gives you so many options. I really feel like having options equals freedom to me. And that's what I think is so attractive about infinite banking and putting your money in a place that it actually works for you, is that you don't have anyone looking over your shoulder being like, hey, Mary Jo, check this box. Why is your income like this? I don't know why I gave that voice, but I just feel like that's how I envision bankers to talk. Hey, give me your firstborn so that you can have access to this equity that you've paid me for 30 years. Right.
You know what, though? I missed that piece. Nelson has a little piece, and I don't remember what chapter it's in. It might be in, I don't remember what chapter it's in. But he talks about the cost of time to get the loans. And
Right.
I completely missed that until we bought our property in 2020. And I had to do 11 months of bank statements. And then I had to send them July 3 times because apparently they can't keep track of what the hell they get in an email. And so I am like busy. We're trying to close on this property. We're trying to remodel. We're trying to figure out when our house is going to go for sale. Like all this stuff going on, running a business, all the things. And I cannot. I can be ornery, as y'all know. And I said, do you need me to come do your job for you? Because I've already sent this 3 times. Right. So the time that it took for me to do all of that stuff, which meant I could not be sitting in front of a potential client and I could not be helping somebody, what was the loss of money there? And so many times we don't think about that piece of it. When we go to the bank and then we have to sit there and then we have to go back and forth on loans and how all of this is done. Now, we just recently bought some land and I have never had a better loan officer ever. Yes, we went to the bank and got a loan. That guy did everything for me. I didn't need to send bank statements. Like, it was like the cleanest, easiest thing ever because he's smart enough to know this lady's got some stuff going on. I am going to babysit her and do everything for her, to the point where, and it was a piece of farm ground, but I didn't know this. Apparently, when you buy a piece of farm ground and then you rent it to somebody, you have to tell the USDA, NRCS, I don't know, you got to tell some government official what you're doing with your land. Well, that is not okay for me. So we get this letter in the mail that says, oh, here's your parcel. This is what was planted on it, yada, yada, yada. And I'm renting it to my brother. And my brother calls me and says, oh, I got this letter in the mail and I didn't know. He's like, I could not figure out what piece of ground that was of mine. He goes, but it's yours. He goes, did you already tell the USDA who's farming that? I'm like, no, I never told anybody. And why do they need to know? And then I
Interesting.
way overstepping of bounds, right?
Right.
And he's like, because they need to know. But the banker did it for me. He knew that my time was valuable. Will I use that banker again? Yes. But that is rare. That is rare to have a banker that understands that, much less a person. If you are a business owner and you are dealing with the banks and you are trying to get loans, how much time is that taking for you? How many times does the bank say, oh, I'm really sorry, Larry, but we can't give you a loan for that piece of equipment for your paving company. Why? It's going to create cash flow so I can pay the loan back. Like the bank a lot of times cannot figure out if I own a business, the thing I'm asking for the loan for will actually generate cash flow to make my business more successful, which will then help me pay the loan back. They don't get it. If you're a homeowner, you have a 30-year mortgage for 15 years. If you can put money into life insurance and you can borrow that to start a business and make more money than your employer is paying you, why wouldn't you do that? The opportunities are infinite. So Nelson says, infinite banking.
Infinite banking.
Do we have anything else?
I don't know. This was really fun. I think we went over a lot of good stuff here.
I think that there's some other stuff sprinkled in. My brain goes, oh, we got to talk about this and this. And so, all right, we are at the 20-minute mark. And so I know that you guys like about a 20-minute podcast. So we'll stop it here. As always, if you have comments, questions, concerns, Mary Jo at withoutthebank.com. If you need to schedule an appointment with either one of us, if you need Tarisa's link, call us. We'll get the link for you. If you haven't got the books, go get the books, withoutthebank.com, and then see if we can help you. All right, you have a fantastic rest of your day.